Last week, Farmers Insurance said it would stop renewing almost a third of its policies in Florida, affecting about 100,000 customers.
Because you have the highest insurance in the nation.
AAA also says it would not renew some policies. The issue taking center stage over the weekend as former President Trump attacked Florida Governor Ron DeSantis.
I want everything for my mom. Don't make me cry. I wish I could wave a magic wand and make it perfect.
It's a national problem, but we have seen no solutions to deal with inflation or interest rates.
Jimmy Patronis is Florida's chief financial officer and a DeSantis ally. He blames the problem on what he calls woke insurance companies with liberal executives. Nazaro has paid off her home in Lake Worth, Florida, and is living off Social Security. But her home insurance has skyrocketed by a whopping 130%.
You believe that this has something to do with woke policies instead of a plain old-fashioned business decision?
100%. The woke policies that these corporations embrace are them not having their eye on that target.
It's very scary, but what do you do? It's crazy, just crazy.
Now, when her policy expires at the end of the year, she'll drop it because she says she can't afford it, leaving her family even more worried about the next hurricane. Some insurers in other disaster-prone states like California and Louisiana have also pulled coverage. Analysts say there are several reasons: extreme weather linked to climate change, a soaring number of lawsuits by policyholders, and ongoing battles with state regulators.
You finally did it. You bought the dream. A sleek, sunlit home in Miami. $400,000. Not a steal, but not bad either. You're unpacking boxes, planning where the couch will go, maybe thinking about your first backyard barbecue. Then, the envelope arrives. Inside, a number so outrageous you read it 3 times, $12,000. That's your insurance bill, not for repairs, not including your mortgage. That's the price just to keep your home covered. $1,000 a month, every single month, just to not lose everything in a storm. This isn't fiction. This is Florida in 2025. And what you're about to hear gets worse. What if one of the smartest money minds in America told you the next housing crash had already begun, but no one was listening? That's exactly what Mark Cuban just did. The billionaire investor and Shark Tank star got pulled into the conversation when a Florida resident messaged him about rows of brand new homes sitting completely empty. Not because people didn't want them, but because people couldn't afford what came after the purchase. Cuban didn't give some bland, PR-friendly answer. He dropped a bombshell. Insurance is going to destroy Florida's housing market. Worse than interest rates, worse than prices. Insurance is the thing nobody's prepared for. That's terrifying, because this isn't a YouTube housing guru. This is a guy who made billions reading markets, predicting trends, and seeing the dominoes fall before anyone else does. And if he's waving the red flag, then we better stop and ask, what's really happening in Florida? The numbers are out, and they're devastating. Let's start with the facts, because they speak louder than any headline. In 2025, the average Florida homeowner is paying close to $11,000 per year just for property insurance. That's nearly double what homeowners in Louisiana, America's second most expensive state, are paying. And 5 years ago, that same policy would have cost around $6 or $7 grand. That's a 70% increase in half a decade. Now ask yourself, did your income go up 70% since 2020? And it's not just rising premiums, it's access. 1 in 5 Florida homeowners today is either uninsured, underinsured, or self-insuring, meaning they're gambling their life savings that the next hurricane will miss their house. These aren't risk takers. They're teachers, cops, retirees, people who've lived in their homes for decades and now literally can't afford to protect them. But that's only the start of a much deeper crisis. The chain reaction nobody can stop. Here's how this turns into a death spiral, a term Mark Cuban actually used to describe what's happening. When insurance costs rise, fewer people can afford coverage. As that happens, insurance companies, especially the national carriers, start to pull out of Florida altogether. Why? Because the payouts are getting too big. The storms are getting stronger. The oceans are getting warmer. The math doesn't work anymore. So they leave. And when they leave, competition disappears. Fewer companies mean less choice and even higher prices. But here's where it gets truly dangerous. Some parts of Florida can't get insurance at any price. And without insurance, banks won't issue mortgages. That's non-negotiable. No insurance, Schambuscars, no loan. And if buyers can't get loans, they can't buy homes. So brand new developments? They sit empty, fully built, ready to move in. But nobody can afford to buy them because the real cost isn't the price tag. It's the insurance. And what happens next? That's where it gets even darker. The lives being crushed behind closed doors. Let's zoom in on the human cost, because this isn't just some market story. One Florida family saw their home insurance jump from $3,000 to $9,000 in just 3 years. That's an extra $500 a month with no change to their mortgage. They loved Florida. Their kids grew up there, but they were forced to leave, not because they wanted to, but because they could no longer afford to stay. Then there are the condo owners, especially in older buildings. After the Surfside tragedy, insurers are demanding higher premiums and costly upgrades, sometimes $20,000 a year in insurance alone. Add in HOA fees, mandatory assessments, and emergency repairs. Owners are literally walking away from condos they've already paid off. It's cheaper to abandon them than keep paying. And those stories? They're happening everywhere. Fort Lauderdale. A city in freefall nowhere. Is this more obvious than Fort Lauderdale? 2 years ago, it was red hot. Bidding wars, cash offers, buyers lining up at open houses. Now, homes sit on the market for 123 days on average, the longest since the Great Recession. Nearly 8% of homeowners owe more than their homes are worth. Sellers are slashing prices by $50,000, sometimes more, just to get a showing. And the real estate agents? They're saying the same thing. Buyers are walking away at the last second. Not because of price, but because of insurance. Quotes that started at $4,000 balloon to $7,000 or more by the time the deal closes. It's like stepping into a financial trap with no exit. And the data proves it. In 2025, closed sales dropped over 20% across Fort Lauderdale. Inventory has surged by 19%, with more homes on the market now than during the 2008 crisis. But this isn't just Fort Lauderdale's problem. The hidden collapse of Florida's economy. Florida's entire economy is built differently from most states. It has no state income tax. That means it depends heavily on property taxes, especially from high-value real estate markets like Miami, Tampa, and Fort Lauderdale. But here's the terrifying twist. When homes become uninsurable, they become unsellable. When they're unsellable, prices drop. And when prices drop, the state's tax base begins to collapse. So what gets hit first? Schools, infrastructure, emergency services, retirement programs, all of it. And here's the kicker. Many retirees have their life savings tied up in their homes. Now they're trapped. They can't sell, they can't refinance, and they can't stay much longer either. It's a slow-motion crisis with no clear solution. And it's spreading. This is worse than high interest rates. We hear a lot about high mortgage rates, and sure, 6 to 7% isn't fun. But here's the difference. Interest rates are cyclical. They go up, they come down. You can refinance. Insurance, it only goes one way, up. Why? Because hurricanes aren't going away. The Gulf of Mexico isn't cooling down. Climate models aren't reversing. Every year brings stronger storms, higher risks, and bigger payouts. And insurance companies? They plan ahead. They're pricing for 5 years in the future, which means even if your house is paid off, you're still paying $1,000 to $2,000 a month just to keep it covered. You don't have a mortgage, but you're still trapped. And that's the scariest part. The Florida dream is breaking apart. This isn't just a housing correction. It's not even a crash. What Mark Cuban is pointing to is something more fundamental. The idea that parts of Florida may become economically unlivable. Not because they're underwater, but because the math doesn't work anymore. You can't run a real estate market let alone an entire state economy, on properties that no longer make financial sense. And if this trend continues, Florida becomes a warning sign, a case study, a cautionary tale for every other Sunbelt city that boomed during the pandemic. Because here's the truth no one wants to admit. The biggest threat to Florida's housing market isn't interest rates. It isn't even hurricanes. It's insurance. This is already happening. Mark Cuban said it best. This isn't about politics. This isn't a future problem. The collapse has already begun. Inventory is surging. Prices are falling. Insurers are fleeing. Foreclosures are rising. And the Florida dream? It's cracking under the weight of a system that can no longer sustain itself. So if you're buying, selling, or investing anywhere in Florida, don't just look at the listing price. Look at the fine print, the insurance, the flood maps, the deductibles, the premiums. Because in today's Florida, owning the home is just the beginning of the cost. And in the years ahead, this might be the story that defines America's next real estate crisis.